Hey traders, happy Thursday. Welcome to Charts and Coffee. Good to see everybody. Hope everyone's doing well. All right, so let's get to this here. Good morning, good morning. Great to see everyone. I just got off an interview, and sorry, usually I get all the links out into the room, so today I just didn't get around to doing it. I just got out of an interview with a trader who I've done a lot of interviews with back in my Forex, my actively trading Forex days. And I just wanted to mention something about the dollar and currencies right now, because whether you're a Forex trader, which I've been a Forex trader since late 99, early 2000. So this is, definitely a market that I believe everyone should be fluent in. And we were talking about the Canadian dollar. And I get a lot of questions about lumber, and I can direct people to wood. I don't want to direct people necessarily to lumber futures because A, they're illiquid, B, they're completely parabolic, and really ugly things can happen pretty quick. So this is local knowledge required kind of stuff. But one thing you can do is you can bet on the Canadian dollar and you can bet on Canada. And this kind of brings me to some of the things that we're doing in the Sector Secrets Mastery, which is, I'm not putting people in wood. It's already extended. It's parabolic. It hasn't pulled back for us to get in. But Canada has, the EWC. In the futures room, the Canadian dollar, the 6C or the FXC, if you'd rather go the futures currency route, that has pulled back. In fact, it spent some time moving sideways before it exploded higher. And one of the questions I get a lot of is, Rog, what about the dollar? And my reply is, look, understand the gears of macroeconomics. Understand what the Federal Reserve continues to do. And that is still very US dollar bearish. And you don't need to see the dollar index. Do yourself a favor. Stop looking at DXY. It's not going to even tell you a real story. I see the DXY pulled up a lot. If you follow me in any of the rooms, I almost never pull up the DX. DXY is for traders who don't understand how currencies work. Currencies work because one currency is gaining against another or losing ground against another. The DXY is a basket, gang, of 58% euro and then a little fairy dusting of a whole bunch of stuff. Stop looking at the DXY. If you want to understand what the dollar is doing, look at FXE. FXE, this is the euro. There is one relationship in all markets that is absolutely darn near 100% an inverse correlation. And I think I have to sneeze. Okay, no. All right, let's see if it passes. So FXE is the euro relationship to the dollar, and it's an absolute darn near tick for tick inverse relationship. If you want to know what the dollar is doing, look at the euro. And one of the things that it's hard to bet against is the euro's trying to turn into an uptrend. It's really giving it a good college try. One of the things that we're long in, and it's been a little rocky, but I think we're on the right trajectory, is we're long FXE. And that brings me up to another topic, which is, for now, sort of leave tech alone. There's a lot that you can take from the macroeconomic environment and look at which sectors. And this is a very popular question that I get. Rog, you're telling us not to look at tech. Please don't look at tech. Unless you hate your money, stop looking at tech, at least for now, until the rotation and the interest and the bullishness returns. Look at energies, look at housing, home builders, look at the transports, industrials, Dow. You're going to find amazing trends are in markets that have nothing to do with tech. And that's where right now, when I can step back, and anyone who's in the sector secrets probably knows this. Where are we looking? Not tech. We have some tech. And even some of the CLOU, the cloud computing, that got hammered too. We stopped looking at it. So we stopped looking at where the markets have lost structure, and we focus on where the markets are looking at structure. I know everyone was complaining about Janet Yellen the other day. Janet, come on back. Do it again. Give us a rerun, because you gave us a chance to get long the Dow. You gave us a chance to get long the XLF via Bank of America. Look for where the intact trends are, gang, and you're going to find it's not XLK, Apple, Microsoft. It's not QQQ. It's not going to be that pocket in the market right now. And so I really wanted to make sure I make that clear because look, I love traders and I love trading. And when I see people are struggling with this current market, it saddens me because except for those pockets where we either got a lot of volatility, like our lift position. Okay, that happens. It's not all just confetti falling from the ceilings right now, but it is mostly. One of our members said something interesting the other day. The markets were down and we were up 3 or 4% in the book. Yesterday, too, our book was in fuego because we're not tethered to the broader indices. So what I'm telling you is look aside from where everyone else is looking, right? Don't be a sheeple, right? Look where the trends are still intact and you will find the overall markets are not down. Pockets of the market are, and high concentration weighting coming from tech, mostly the Apple, the Microsoft, the XLK is what's influencing what's happening. There's plenty of strength elsewhere. Focus on that and the markets are a much happier place right now. So yeah, I would love Janet Yellen to make a return visit. Yeah, Dale, I love the XLB. If I neglected to say basic materials, is a straight up macroeconomic uptrend and fuego. Basic materials are going to benefit from reflation, right? So when I talk about macro or macroeconomic, I'm always talking macroeconomic. Macro is big picture. I don't need someone to tell me a story. You want to watch macro, go watch whatever's happening on television. Macroeconomic understanding is being able to measure the pillars of inflation, growth, monetary policy, and money supply. And that means looking at the asset purchases, looking at the M1, looking at the inflation trajectory, either by the PCE or the CPI, and looking at GDP. That's measurable. We can look at a rate of change conversation on that. That's not someone talking their feelings and their, no, or headlines. My gosh, you don't want to go there. Macroeconomically, this is where things are working well. Let macroeconomics be your watch list building process, which is what we do, and then start using your wonderful technical tools as, if you're a member of the Simpler community, then go to your then go to your macro, go from macro to your technical tools, and you're going to find that it should click and gel a whole lot better. All right. So yeah, Dale, I love where your head's at. Yeah, XLB, XLI, love XLI, IYT, even XLV. XLV may not be near the top of the list, but golly, looks a whole lot better than most of tech. What do I mean by that? Look at CLOU. Now, here's what's really important, gang. CLOU, I ended up getting stopped out. I have my set fixed stop and I'm out. I took a paper cut, took my medicine, as I like to say. But what did I not do? Let's file this under things losing traders do. They're going to go right back into this. It's like the bully at the lunch in the schoolyard takes your lunch money. What do you want? You want your money back from the bully. Probably not going to happen until you grow a little. I think the first inclination when we get stopped out of something is to go back. It's a revenge mentality. What I say is, look, I've lost edge. I don't have an advantage here. And let's go find somewhere else to press our advantage. So I take my medicine and then I don't pull this chart up again, or at least I do my best not to. And we look at where we do have an edge. Okay. So I love, yeah, you got it, Dale, 100%. 100%. And then you might say, well, Rob, how do you track this stuff? I always like to be super transparent with you guys. I love Koyfin, Koyfin. This is free. It's a great way to look at all the different sectors and industries and compare them. Sector rotation, it sounds so fancy. It's just some lingo for where is the market outperforming and where is the market underperforming. I look at it as a Ferris wheel. You ever get on a Ferris wheel? If you're at the bottom of the Ferris wheel, you're thinking, I paid for this. If you're at the top of the Ferris wheel, great ride. But guess what? That thing's going to spin around 4 or 5 times before the ride's over. At some point, hopefully, whoever was at the bottom is going to be near the top. And that is sector rotation. Whatever is parabolic, moving higher, that's where the exhaustion typically happens. And you'll see capital flow into sort of the underperforming parts of this. We saw this last year with energies and financials. But remember, the one market the one index, let's be specific, the one index that is going to outperform the others in this environment macroeconomically is the Dow. Dow Transports Industrials, DIA, IYT, XLI. All right. So next up is, let's see what else we have here. Kroger dip buy. We did. I did. That is something that we did grab a piece of. It sure did take the scenic route. But since we have multiple zones, another thing I would encourage everybody to do is don't assume a market's going to turn on a dime, right? It's not going to have a magical unicorn level from which the market reverses. It's going to be a zone. And for me, that zone is broken up into, and it has been for decades, agro, aggressive. Agro comes from, by the way, you guys remember the crocodile in Crocodile Hunter, Steve Irwin, that giant crocodile at Australian Zoo? He called it agro. And so I grabbed it because those agros can be crocodile levels. What do you want to do? You want to be careful when you're dealing with crocodile levels. So agro, moderate, conservative. And you look at a zone. Agro was tricky. Moderate and conservative were able to hold that extra dip a whole lot better. We never broke through, I believe, V-score levels, volume weighted average price, Z-score levels that told me the trend was shifting. And so, I think we're right back on track. I'm not buying it today, though. The momentum is already moving higher. We're looking at buying it when the momentum's moving lower. Okay. We put this trade on, I believe, on who's in the mastery? What day do we put this on? My mind's a blank at the second. I think it's the 30th, on that bearish movement on the 30th. So imagine if you're buying something as it's moving lower, you're paying less for your call. You have more threshold for days like the 4th. And that's the psychology. All right. How long is inflation going to be in fuego? For as long as the central bank policy supports it. We'll never know time horizons, gang. We can only monitor the time frame, but it's for as long as the central bank allows it to be. So as long as the central bank remains accommodative, and that's that's the $1 million question, right? Nobody knows, but we can track it. There's a number of ways to track it, and that's really what macroeconomics are about. Not when is it going to rain, but likely it's going to rain today. Remember, macroeconomics are not timing. It's not about when is it going to rain. Is can it rain today, and should I carry an umbrella? That's macroeconomics. All right, what do I think of RIG? We were playing RIG quite a bit for a while. Let me show you structure. Let's compare structure. So those of you in Sector Secrets will know we were playing RIG for a while when it was double green. What's that lingo mean? 8, 13, 21, 34 in a bullish structure. You can see that lined up along the bottom of my chart. And then what happened? It broke. It went red, right? Candles went red. The trend went yellow. Is RIG buyable? Yes, I believe it's buyable just above $3. But what's going to happen now is RIG has stopped trending, and now it's in usually we break a trend and go into distribution. We have broken a trend and gone into a kind of an accumulation consolidation market. Nonetheless, I'm still looking at the market as overbought, oversold. So the narrower the range is, the better, I'd say a breakout type approach, a squeeze type approach would be. And the wider the range is, the more of an overbought, oversold environment we're in, say ready, aim, fire. But I think this area just above $3 is a decent place. And at a $3 stock, I just own RIG. I've bought RIG, and my cost basis is probably somewhere around $270 because I bought it on the dips on the way back up in early 2021. And now here close to mid 2021, if I'm adding, it's going to be 310, 305, that area. So I've actually got the underlying stock, but the options chain is very liquid here. So I like the long side. It's just not a trend anymore. And we're going to need a nice push. What I'm disappointed is with RIG, it's not moving with our XLE positions. We're long XLE. We're long MPC. We're long Schlumberger, which is more of an OIH conversation. But so you see how those are moving higher? Those are long positions in Sector Secrets. Again, am I looking at tech? No, I'm looking at energies. Why? macroeconomic influence, and some nice rotation. Don't get me wrong, I'll take the rotation. Can't control that, but definitely was waiting for it. So RIG, unfortunately, is not rising with that tide, which is why I think it's a little problematic. Okay, so Andrew, yeah, I'm disappointed when it's not going to be, syncing up. All right, so what else do we have here? Let's grab a few more questions before I'm going to run into the futures room. We're going to trade the open. Now, when I was in the open in the futures room on Tuesday, that's when Janet Yellen pretty much Donkey Konged the market. I thought I lost my edge on the day trading. I broke through my hourly PMRs, my HPMRs, which is a process I created using historical volatility. I broke through my V scores, another process that I used creating standard deviation studies on the VWAP. I thought I've lost my edge. My tools right now are saying, we don't know. You've got to know when your tools are saying we're lost, right? How many of you have used GPSs and all of a sudden the GPS is like, I don't know where the heck we are. After the mild panic, you realize, well, you're still human and you can figure your way out of the being lost. Sometimes our tools are like a GPS that hasn't updated for the area that we're in. It really is. That's a great analogy, actually. So when that happens, shut it down. What do? Here I am. We're doing our typical day trading on a Tuesday. Janet Yellen Donkey Kong's the market. It's heading down. My tools at this point are saying, we don't know. We went to where the opportunities were. And if you were in the futures room or even in the sector secrets, what did I start doing? I started sending out alerts. Buy Bank of America. Buy BAC. Buy DIA. What else did we buy that day? XLC. I think Bank of America hit the profit target that day. We took advantage of where my GPS was saying, yeah, I know where we are here. I could definitely guide you through this. And so be comfortable switching. Even if you sat down to do a certain kind of trading, be comfortable switching. And that's exactly what we did, mid-morning on Tuesday. And if I get another opportunity like that, I'll do it. All right. Let's see. CTVA. Hey there, Deborah. CTVA. Well, CTVA was a buy. This is another sector secrets buy. We've been in CTVA. Do I want it again? Well, remember, one of our guidelines is we love the rally, the 6 to 4 week out window into earnings. Not 2 days, not 6 days, 6 weeks, 4 weeks. And so right into earnings, we want to be out, right? So we close out that position. So the question is now, can we get back in? I'll probably wait until tomorrow, although today's looking kind of interesting to get back into Cortiva. Yeah, that was a really good trade for us. We get out before earnings. I am almost always flat through that earnings volatility, and then we'll be pre and post. And if you want to know a little bit more about the way that I do earnings, gang, head on over to countdowntrader.com. You'll see there on the left side of the margin there, I've got look for this after earnings, my 642. Gang, these are tried and true. I've been doing this with earnings for decades. It's really simple. Find a trending market 6 to 4 weeks out before earnings. Buy the dips, get out before earnings release. That's it. Read it. There's a whole lot more detail in the article, but you can read that. And these are great workups. Trish worked these up from the process that I use, and I think you'll really like that because look, we're winding down this earnings season. The bulk of the impactful stuff is behind us, but guess what? I'm already thinking about next earnings season. And so 6 weeks before financials release again, I'll get back to work. All right. So what else do we have here? For a lot of the volatility that we've seen, let's walk through some of the volatility because I think like Kroger is a really good example of this. So let's go back to the way that we scale in. And I would really encourage you guys, a lot of you guys, to scale in on this. So let me give you a little bit more detail and then I've got to run. Agro levels will sometimes be ditched, and I'll keep a moderate or conservative because I can handle the risk from those levels. A lot of times traders will ditch the entire trade rather than looking at each segment and each individual entry. So what I'll leave you with here is, as you're scaling in, treat each individual level as a standalone and run your risk analysis on each entry, not the trade as a whole, but each entry. And what you'll find is sometimes you'll end up taking medicine, exiting at an aggro or even a moderate level where the conservative can still manage to sort of wait out the volatility, wait out the trough. And so if you do it that way, especially in a market that you feel you have an edge in, you'll find that, yeah, I'll take small paper cuts and then take that conservative, which is always going to be the largest position because we scale in almost triangular, small position, medium, large at the conservative. You'll find that you can still take a couple small losses, but keep the sort of bulk of your position for the bigger win. And that's something I hope that you guys think about as you're putting your trades on, especially if you're looking longer term, daily time frame swing trades. Okay, now I've really got to run. All right, gang, have a great one. Thanks for being part of Charts and Coffee. I will see you all in the futures room here in just a minute, and I'll see you all in the options room at 1:30 for Simpler Showcase. Bring your questions. I'll see you then. Be good to each other, gang.